Yeah, good morning, everyone. So yesterday we saw some corrections in the US market, mainly driven by the minutes of the Fed, which came out and was indicating that the interest rate reduction is not near. It's still away. But futures are quite positive, mainly driven by the good results from Nvidia, which has shown outperformance and also indicated strong demand for the coming period as well. So futures are in the US market are a bit positive. But what we are seeing, main thing is that there is a good correction which is happening in the metal prices. Most of the metal are declining. If we talk about copper is down by around 3.5% in LME, and also aluminum is down by around 3%, and silver is also down by almost around 4% from the time we close our market. Silver is a good part of earning in Hindustan Zinc. Uh, and iron ore is down by around 1%. So need to be careful in metal stock. We may see some corrections happening today as well in the metal stock. Asian markets are also a bit dull. If you are down a bit. This is also driven by the increasing dollar index, which has moved up by almost around 25 basis points from same time yesterday. So overall, seems more of a bit profit booking day today. So be care. So market is likely to see accordingly. Now I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. Last few trading session, we saw that market are moving towards upward, and right now trading near the resistance zone that comes around 22,500 to 600 range, and Nifty trading that upper range that is immediate resistance facing 22 640 and 617 upside in spot Nifty, and we expect some profit booking in upper level. First immediate support place around 22,540. If Nifty break the support for intraday in first half, then we expect further pressure towards 22,470 and for 22,400. But upside immediate resistance for 22,640, 70. If Nifty break this upside, then we expect this momentum to be continue. Otherwise, we expect some profit booking and in this level. Bank Nifty, we saw yesterday some pressure and close the below the last few trading sessions closing. So we expect this pressure to be expected to in Bank Nifty towards 47,300 and 47,000 at downside. But first major support 47,670, break then 47,300 and 47,000 at downside. Upside 48,240 first immediate resistance for Bank Nifty. Fin Nifty also trading in upper range, and we expect some pressure in upper side and because trading in a first immediate resistance that 21 4 400 and then 21 500. Below the important support place 21 280, then break that level, then 21 170 and 21 100 at downside. So all three index trading in upper range and upper resistance. So be cautious in upper range. If any support break in intraday, then we expect for further pressure and some profit booking in all three index. Stock specific, Britannia looks positive and Coal India also looks positive. Britannia last 8 to 7 trading session trading in sideways. Yesterday we saw that some breakout in Britannia. So we expect some positive momentum in upside. GMR Infra also looks positive at current level. We given a call in Loris Lab. Loris Lab given a good breakout in daily chart. So we expect this breakout momentum to be continued towards 480 and upside level. Downside 445 is the immediate support for Loris Lab. Negative side, Canfin Home looks weak at current level. We expect some profit booking continue in Canfin Home. Yesterday also saw last three trading session trading the long below the long term moving average. To expect this downside trade will be continued towards 727.16 at downside. Upside 752 first immediate resistance, that is 50 DMA. That's it for technical derivative I can carry.
Yeah, thank you. Good morning, Aaron. So on the derivatives front, if you look at the overall scenario, as per the yesterday's session, we have seen that the Nifty gave close above the resistance zone of 20 to 550 level, due to which the OI positions of the put writer got added up strongly near to ATM strike, and the call writer positions at 20 to 500 has got liquidated on the minor front. So in today's session, we might see some nifty range to get extended towards the 20 to 750 to 800 level, where again we might see some resistance zone. But on the downside, the immediate support for the nifty lies at the 20 to 550 level to 500 level. Once if nifty spot goes below 20 to 500 level, then we might see some pressure again to be witnessed. So overall scenario for today's first half seems to be on the positive front. You can create new long position with a support of 20 to 500 level. But on the sector specific front, IT, FMCG, and realty looks positive. Selective counters which look positive will be Muthoot Finance, Lupin, Granules look positive. While on the negative front, where we have seen that the fresh shorts has been created, is from the IEX, XN Industry, and Crompton Greaves. This three counter looks negative today's trading session. So that's it from the front. Thank you.
Good morning. On the results front, Garden Reach Shipbuilders and Engineers result has improved. Revenue was up 10% sequentially, 69% year on year. EBITDA margin improved to 8.9% versus December quarter's 5.3% and last year's 3.4%. This resulted in profit doubling on a year-on-year basis, and it was up 26% sequentially. So we have a positive view on Garden Reach. Today, one IPO will be listing, Go Digit General Insurance. Listing is expected to happen at a premium of around 10% above the issue price of 272 rupees. We had given neutral rating. Market cap will be close to 25,000 crores. Total issue size was 2,600 crores, comprising of 1,100 crore of fresh issue and 1,500 crore of OFS. Company was incorporated in 2016. It's a leading full stack non-life insurance company. Despite being a digital company, it is not only a broker like Policybazaar, but it also manufactures its own insurance policies, just like ICICI Lombard, for example. Only difference with other general insurance companies is that Go Digit focuses more on integrating a higher degree of technology in its operations. In terms of product mix, motor insurance forms 60% mix, health insurance 15%, property and engineering around 10%, and the rest of the products include travel and marine insurance. Although Go Digit has managed to increase its market share to almost 3% by growing at a faster rate, its profitability has been subpar with ROE of just 5% in the 9 months annualized period. Against average of 16.5% for listed peers like ICICI Lombard and Star Health. Also, the combined ratio, which is supposed to be lower, in case of Go Digit, it is at 109% for the 9-month period compared to peer average of 101%. And on valuation side, Go Digit is coming at 7.6 times trailing price to book and 2.8 times market cap to gross return premium. So it is slightly at a premium to private peers despite having inferior return ratios. So that's why we had given a neutral rating. Thank you.
Good morning. Yesterday, Galaxy Surfactants had hosted the con call. The management highlighted that overall top-line performance was weak on account of lower realizations. While in terms of volumes, India's growth was moderated at 4%, and rest of the world markets reported strong recovery with 32% volume growth. However, AMET volumes declined by 12.5% due to the Red Sea impact. The management highlighted a strong recovery is expected across regions in FY25. It expects India volumes to grow at a high single digit. Also, the management has seen the demand recovery in developed markets on account of restocking, which should sustain the growth momentum. And after extended weakness in EMET, it has seen positive. We have seen the positive commentary in terms of AMET volumes growth at double digit in FY25. The company is focusing on specialty care portfolio to drive the growth. Also, it has maintained its volume growth guidance in the range of 6 to 8%. In terms of profitability, gross margin improved sequentially, but EBITDA margin lowered at 10.9%, mainly due to higher freight cost due to the Red Sea issue. And the management is expecting margins to improve. The stock is trading at a PE of 25 times to FY25 EPS, and we are positive. Jubilant Foodworks Limited posted the results below expectations. Revenue grew by 6.3% on a YY basis. During the quarter, LFL growth stood at 0.1%, which has turned around after witnessing consistent weak performance in the last few quarters due to weak operating environment. And the growth was mainly aided by delivery LFL, where the growth stood at 7.8% on a YY basis. EBITDA margin reported at 19.1% versus the expectation of 20.2%. The company has added 67 new Domino's India stores and entered 28 new cities. Also, for Popeyes, it has added 10 new stores. The management has guided for opening 180 stores of Domino's, 50 stores of Popeyes, and 25 stores of Hong's Kitchen in India in FY25. And in terms of international stores, the guidance is 50 stores for Domino's and 70 stores of coffee in Turkey, along with 20 stores of Domino's in Bangladesh. So the next 2 years, the company is expected to be in expansion mode. The management is still uncertain on the demand environment, and the stock is trading at an expensive valuation of 77.6 times PE to FY25 EPS. Thus, we are neutral on the stock. Yesterday, Indigo Paints posted the results broadly in line with expectations. Revenue grew by 18.3% on a YY basis. During the quarter, volume growth was at 15%, and for full year, volume growth was at 25%. Gross margin stood at 48.9%, which grew by 204 basis points. EBITDA margin reported at 22% versus the expectation of 22.4%. The stock is trading at a PE of 38.4 times to FY25 EPS, and we will provide the outlook post con call. Kaveri Seed Company posted the results above expectations. Revenue grew by 33.5% on a YY basis. During the quarter, vegetable segment continues to perform well, both in terms of volume and revenue. And this was mainly on account of increased in share of new varieties launched during the year. And the volume increase in vegetable crops has resulted in good realization. EBITDA margin reported at negative 12.1% versus the expectation of negative 19.1%. The stock is trading at a PE of 14 times to FY25 EPS, and will provide the outlook post con call. Thank you.
Yeah, apart from this, few more results. One of the company, Ratan India Power, has reported the result. In this result, company has stopped accounting one of the power plant which was not operational, and that plant has gone into NCLT. As such, company has excluded that financials of that results. So that is the Nasik plant, and now the remaining plant is Ratnagiri. The Ratnagiri plant was anyhow operating well in the past also. Uh, so excluding the result of Nasik plant, now the balance result has shown improvement. The EBITDA came in at 2,206 crores versus last quarter 196 and last year 171 crores. And now the debt level has also come down to almost around 4,000 crores. And from the earlier level of around 10,000 crore, 21,000 crore plus, excluding the Nasik plant debt, which is now company has stopped accounting as the company, the subsidiary company has gone into NCLT. If we consider the pure play Nasik, pure play Amravati plant and the operation of the same, the stock is available at 17 time EV by EBITDA, which is what we feel is at the upper end of the other private power company, and we do not have any growth prospects for the Ratan India from here, as the plant is already operating at a full capacity. So seems fairly priced. We may see some profit booking in the days trade post the result. Then Grasim came up with the numbers, and numbers were in line with expectations. Here, the viscose yarn or viscose filament has shown improvement from the bottom, and whereas caustic soda has shown a decline as compared to the last quarter. So both directions were reverse. Means viscose is showing bottoming out and now showing improvement, whereas caustic soda continue to remain soft. The update on the paint sector is that the company has already launched its product and the initial response was good. Though it's a very initial stage, and 3 out of the 5 plant has started production. Almost around 7,000 crore company has invested in this business. So one need to be watchful how the response comes and all for Grasim in this business, but definitely the gestation period will be longer for the paint business. So overall outlook for the Grasim seems neutral at current point of time. Then Gland Pharma came up with the numbers, and the numbers were apparently looks in line with expectations. But if we bifurcate two businesses, the existing business of the company has done very well and shown good improvement, whereas on the other hand, the Cenexi business, which company acquired around 1 year back, had shown decline and shown poor performance. So in all together, the result is in line with expectation. What we see that Cenexi operation, what management has indicated, that will be reviving in 6 to 9 months and will take some time. And the existing business of Gland is likely to sustain. The good performance of the existing business is likely to sustain. So outlook for the Gland Pharma seems positive from here. Another company, Ramco Cement, has come up with the numbers, and numbers were below expectations. Company has reported a strong volume growth of almost around 38% year on year and 16% 16% year on year and 38% quarter on quarter. Strong volume was negated by the lower price realization. So the realization was quite weak for the Ramco Cement. Company has used high volume to push into the market and gain market share. But that has impacted the EBITDA per ton, and the EBITDA per ton has come lower at 771 versus last quarter 1,009 and last year 892. So substantial decline in EBITDA per ton because of the lower realizations. So overall result is soft and declining. So outlook, and the stock is available at 10.4 time EV by EBITDA. We had seen in the past that Ramco Cement performance is steadily showing softness. At some point of time, it was the leader in EBITDA per ton, but now is showing consistently softness. So overall outlook on the Ramco Cement is neutral. That's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So yesterday we had witnessed profit taking in across commodities. Prices in gold are supportive at 72 350 to 72 200 levels. So prices can correct till the support area, and a bounce back can be witnessed. So buying around 70 to 300 with a stop loss of 72,000, and on upside again 70 to 800, 73,000 one can take profits. Also one can initiate a sell from 73,000 with a stop loss of 73 300. Silver too, prices are supportive at 91,000, already tested 91,000, and a pullback is likely uh, to be witnessed. Prices can pull back till 92 500 levels on the upside, uh, whereby again for trading purpose one can initiate a sell and maintain a strict stop loss of 93,000. Uh, Copper, we are expecting prices to test 888 levels, 885 on downside. So a pullback till 900 to 905 is expected, whereby selling pressure could be witnessed. In zinc also, we are expecting prices to test 267, 266 on the downside. So selling around 272 with a stop loss of 275 is recommended. And in crude oil, we are expecting prices to correct. Prices are expected to test 63.50 on the downside. So any pullback around 64.80, 64.90, one can initiate a sell with a stop loss of 65.60. And in natural gas, by around 230 to 228 is the supportive zone. So buying with the stop loss of 223 is recommended. On upside, again, it can test 245, 250. So that's it from us. Thank you very much.